I want to do just a quick recap of the week and how I'm reading price going into next week. So this is NQ on a monthly chart, and the reason why I have it on a monthly chart is because um, we just closed out the month, right? So October just ended, so this monthly candle just closed, and won't spend a ton of time here, but you can see since April, we've had 7 straight months going straight up. So we'll go down to the weekly now. Still bullish order flow. Bullish order flow is being respected. We have bullish order block here on a weekly time frame. We have a bullish order block here being respected on a weekly time frame. We have a very large gap up that started the week off last week, and I will be focused on this as we get down into the lower time frames. So on a daily chart, we have Thursday's candle, which had a long wick higher, a long wick lower. Okay. We also have this inefficiency here on the daily time frame. So this gap here, you have to account for, right? We would normally draw a fair value gap or a BISI from wick to wick, but because we have this gap here, we have to account for that gap. So you have to anchor that BISI to this candle's close, not the high. So I want to notate these two wicks here. All right. So we have 50% of this wick is annotated here, and 75% of this wick is annotated here. So you can see we opened up, we traded up, and we stopped just short of 50% of this wick. Then we traded down, and we traded down past 75% of this wick. So when we're bullish, right, we look at this wick as a discount array, meaning if we want to remain bullish, we want to see price stay in the upper half. So if we measure this, right, this is the upper half here, and here is 75%. I'm actually going to move that up a little bit. There we go. So if we're bullish, we want to see price stay in this upper half of this wick. Conversely, if we're bearish, we want to see price stay in, I'm going to move this down a little bit too. We want to see price stay in the lower half of this wick if we're bearish, right? When we're looking at order flow and we're trying to see what PD arrays price is respecting, you can see that from the bearish perspective, we are respecting the bottom half of this wick very nicely. We come right up and fall just short of 50% of this wick. Conversely, we have traded all the way down and through 75% of this discount wick. So when I'm looking at this, this is telling me this is a premium wick. We are respecting premium arrays more than we're respecting the discount arrays that we would want to see respected if price is going to move higher from here. Now, we are still bullish. Obviously, we've been in a long-term bullish trend, but we're in a very steep premium. We're very extended, and I think it's reasonable to think that we can see, a bit of a pullback. Now, what does that look like? So I'm going to drop down to a lower time frame, and we'll go to an hour here. So on the hourly time frame, we have here are the daily wicks, right? There's 50% the premium wick, and here's a 75% discount wick. And then this right here is new week opening gap of this week, okay? So this little candle here is Friday's close, and this candle here is Sunday's open. And this is of last week. So we've left this completely open, meaning we opened up, almost 200 points higher. We gapped up, and then we just moved away the entire week. Now, the middle of the week, we saw, a bit of a pullback, but we've left new week opening gap completely open. So new week opening gaps are always going to act as a draw on liquidity, meaning that it is going to act as a magnet for price. So I couple that, knowing that this is a strong magnet on price, I couple that with, if we go back to the daily chart, with these two wicks, this premium wick and this discount wick, right? And it's a premium wick. This is identified as a premium wick because it's above price, and this is considered a discount wick because it's below price. We have shown more respect on the premium side, staying in the lower half of this, than we have on the discount side, meaning if we wanted this discount wick to support price and go higher, we would want to see this remain in the upper half. It didn't do that. It traded below the halfway mark of this into the lower quadrant, or 75% of this wick. All right, traded through that, and then it did trade back up and close back up a little bit higher. But nonetheless, on the premium side, we couldn't even get up to 50% of this wick. We couldn't even make it up to 50%. That's a bearish signature in price, right? So when I'm forming my narrative for next week, these are the things that I'm looking for. Now, I couple that with the fact that we have new week opening gap that has been unfilled down here that is going to draw price down to it. So I think it's reasonable to have us open up on Sunday, wherever that may be. Maybe it's higher, maybe it's lower. But I think it's reasonable to expect that sometime in the beginning portion of next week, we're going to see new week opening gap traded too. Now, that does not have to happen, okay? But, we could just go higher because on a long-term perspective, the monthly, weekly, and daily chart, we are still bullish. So, we do not have to see this happen, but it is reasonable to expect it to happen. So what that means is, if we open up and we start trading lower down here, I will not be in a position where I say, oh my gosh, we're bearish, now we're going lower. I just know that we are in a premium marketplace, and we have multiple factors that are saying, price can go lower down into last week's new week opening gap. And if you look at order flow, right, you can see premium arrays being respected. Okay, this is a bearish order block. The last up close candle before a down move, we come back up to it, bodies respect it, and we sell off. Same thing with this candle right here. This is a bearish order block. Okay. Just do this. This candle right here is a bearish order block. Okay. It's one up candle in a grouping of these down candles. We trade back up to it. We reject and go lower. Now, what do we have right here? We have this low and this low, relative equal lows. That is a draw on liquidity, always. It's always a draw on liquidity. Plus, we have new week opening gap below here. That is also a draw on liquidity. So, and you can also see there are bullish arrays that are being disrespected, right? So if we're bullish and we see this big imbalance, you would want to see price trade to it, stay in the upper half, and then move higher. But it's not doing that. Okay, it's trading below it, back up into it as an inversion, and it's going to send price lower. So you can see that bullish arrays are being disrespected, and bearish arrays, here is a SIBI right here. Look at the bodies, right? So the wicks are coloring outside of the line, right? The wicks do the damage, but the bodies tell the story. The bodies are staying contained in here. So this is bearish order flow and bearish signatures in price that are sending price lower. So we couple all of those together, right? From the higher time frame down to the hourly and even below. And this is how you form a narrative. So our bias can remain bullish for the long term, but our narrative is what we're going to trade off of. So if I have a bearish narrative, right, because I think there are multiple draws on liquidity lower, right, you can formulate trade ideas off of that narrative on an intraday basis, on a session to session basis. And also, the last thing here is if you look at dealing ranges, and I'm not sure how much you've learned about dealing ranges yet, but if you measure from this low to this high, here's our dealing range. Okay, so if you measure low to high, and annotate that as such, okay? Anything, this is equilibrium, so this is 50%, high, low, 50%. Anything in the upper half is considered a premium marketplace. Anything in the lower half is considered a discount marketplace, okay? So when we are looking for the best long positions or the best long setups, they occur in a discount. Conversely, if we are looking for the best short setups, they occur in the premium portion of the dealing range, the upper half, okay? Now, one thing, and I just noticed this morning when I threw this on the chart, if you look at this low to this high, and we identified this as the dealing range, 50% of this is equilibrium. So that means that if we want to go higher, right, at a bare minimum, price has to come down to equilibrium, right? And that will balance algorithmically the dealing range and give it free rein to move higher, right? It can come down into a discount and then move higher, but at a bare minimum, it should come down to equilibrium. What does equilibrium line up with? Literally exactly to the tick. 50% of the new week opening gap, which is right here. Okay, so if I put this right here on the high, the highest high to the lowest low, an equilibrium of this dealing range literally falls and overlaps to the tick exactly 50% of new week opening gap. So that's not random. That is the algorithm leaving these signatures behind, that they're like little clues that tell us likely this is where price is going to go. Now, how we trade from here, we have to see, right? So again, we have relative equal lows, new week opening gap, strong draw on liquidity. We have a dealing range that we are in a premium of, meaning we will likely trade back down to equilibrium. And we have multiple bearish PD arrays right here. Bearish order block, bearish order block. We have a SIBI. Price is respecting all of these bearish PD arrays. It's disrespecting bullish PD arrays, right? And we have on a daily time frame, we have these two daily wicks right here. We are respecting the premium and we are disrespecting the discount. Okay. So all of these are leading me to believe that this is likely our first stop next week. It does not have to be. Okay. We can just disregard all of this and continue to move higher, and that's feasible, especially when we're in a very aggressive bull market. like we have been in for the majority of the second half of the year. But the way I'm reading the market and what I'm anticipating and the narrative that I'm forming is that we should come back into new week opening gap sometime in the beginning portion of next week. And just another note on the dealing ranges. How do you know, like, how do I identify a dealing range, and why am I using this low to this high and not like this low to this high? This is my rule of thumb, okay? We start at the lowest low. Let's start here, and we'll anchor there, right? And go to the highest high like this, okay? So if we go from low to high, we traded down into a discount. This is equilibrium. This is a premium. This is a discount, right? So we go low to high, and we trade down into a discount, and then we move higher. Price in this leg run, or in this price run, the leg right here that goes from high to low, this fulfills coming down into equilibrium and into a discount. Okay, so this allows the algorithm to now send price higher. Okay, so this is the first dealing range. Then we move to this low to this high, right? The lowest low right here to the highest high, we consolidate, we sell off where? Down to equilibrium and right into a little bit of a discount, and then it's off to the races, right? So this is a qualified dealing range that has gone from discount to premium back to equilibrium, right into a little bit of a discount, bullish order block right there, and propels higher. So now this is a confirmed dealing range. Now we move it up to the next low. That's this low, okay? And we keep dragging this up, this high, this high. You can't use this high, right? Because price did not come back down, right? So it just kept going, which is fine. You want to wait until you see a clear and identifiable dealing range, low to high. Now, we have not made the trek down to equilibrium yet, but this is where I'm saying, this is where we are right now. This is why I'm saying I have multiple things telling me, from the daily wicks to the bearish PD arrays being respected, right, to the equal lows, to the new week opening gap, to equilibrium of the dealing range. These are all things that are all this is confluence, that are all lining up, giving me, even though we have a bullish bias because we've just been going higher, you can see that on the monthly chart, this is giving me a bearish narrative, right, for an intraday trade, right? So when I'm thinking on, Sunday night, Monday, Tuesday, do I want to look for longs or do I want to look for shorts? In my opinion, I think the short setups are going to be cleaner, right? Because they're being respected up here. Bearish order block, SIBI, they're all being respected. This one too, look. This one to here. Again, where the body's stopping. Right at equilibrium. This whole wick came all the way up, tapped that bearish order block, and came all the way back down and stopped right at equilibrium, 50% of this SIBI. Okay? This one right here. We repriced this entire thing, consolidated in it, came up, took out liquidity, bodies stay inside of the inefficiency, and then we sell off. We come right back up. This is another order block right here. We just tap it right there, tap it again, sell off, create another order block and a SIBI. Bodies respect the SIBI. Wick comes up, taps the order block, sell all the way back off, and then we close right here for the week. We leave, again, relative equal lows in place. This is always a strong draw on liquidity. New week opening gap has not been touched yet. This is always a strong draw on liquidity, and equilibrium of whatever dealing range that we are currently in is always a strong draw on liquidity, low to high, equilibrium, also 50% of new week opening gap. This, I believe, will be the draw. Now, can we come down like this and maybe go for this inefficiency here? Yep, absolutely, right? But if we turn around here, right, and we get below here, and then we start moving lower and lower and target maybe these equal lows, then that's a different conversation and we have to reevaluate, right? But I'm not going to say that, I'm not going to try to pick the top and I'm not going to say that's going to happen. I'm just giving you kind of how I'm reading the market going forward for next week. So that is basically my weekly analysis. I do this every single weekend, whether it's a Saturday or a Sunday, just whenever I have time to do it. But this is my week ahead analysis, and this is how I am looking at the market, for next week. All right, talk soon.